Welcome to the SCORE podcast.
Conflicting indicators are all around us. Today, April 3rd, the Wall Street Journal reports that after its worst annual performance in more than a decade in 2022, the auto industry expects sales to rise 6% over the previous first quarter. Meanwhile, reports from the U.S. Department of Commerce report that consumer spending rose more modestly in February after a jump at the start of the year, while inflation cooled but remained elevated. So how are consumers reacting to all this from a credit standpoint? I think it's a good time to see what CreditGauge, powered by VantageScore, says. I'm Jeff Richardson, host of the SCORE podcast, where we always speak to the most informed experts in the financial services and fintech industries. Today, we get to circle back with our colleague Susan Fahy, Executive Vice President and Chief Digital Officer at VantageScore. Susan and her team launched CreditGauge last October. CreditGauge is a tool available at VantageScore.com that provides critical insights, including the average VantageScore credit score, as well as key consumer credit metrics that actually underpin the scoring model, such as delinquencies, balance to loan ratios, new account openings, and other dimensions. So it's a really useful tool, particularly as we see a lot of volatility out there. Susan, thanks for joining the podcast today.
Thanks for having me, Jeff.
Okay, so to start, how are consumers doing overall with their credit health?
So with CreditGauge, what we're seeing is that overall consumer credit health remains stable. There are some deteriorating trends, but overall, consumers seem to be handling their credit relatively well when you compare it to historical standards. Overall, the percentage of borrowers with late payments remains low, but delinquency rates continue to rise compared to the same period last year.
Interesting. Let's dig into the delinquency rates a little bit. What products is CreditGauge showing there's some increased risk?
One example is in auto loans. It's interesting to see that across the board, delinquency rates for auto loans in the 30, 60, and 90 days past due category all have increased delinquency rates year over year, but they also are higher than they were in the pre-pandemic. And this is mainly due to inflationary pressures. So the cost of cars have gone up, interest rates have gone up, but consumers have to prioritize other expenses, maybe over their car payments. And so it results in consumers falling behind on their auto loans.
Aha. So in my intro, I mentioned that the auto market's poised to recover a little bit. At the same time, we're starting to see some increased risk there. So it's something we'll have to keep a close eye on. Let's talk about the credit card sector, particularly balances. How are consumers doing with their credit card balances in terms of like inflationary impacts?
So for overall credit card balances, they're up year over year. So in total, credit card balances have increased 16% compared to February of 2022. And when we look at the data, we can see what age groups are contributing the most to that overall rise. Borrowers that are the main contributors to the 16% increase as an overall number are millennials and Gen Zs. So it's interesting to look at this because if you look at a year ago, the millennials' credit card balances today compared to a year ago are up 25%. And with Gen Zs, it's up 27%. So the higher balances, we believe, is due to a combination of factors. Like we mentioned before about inflationary pressures, although some of the inflationary pressures have been easing, interest rates remain high, prices remain high, and people have been using credit for non-discretionary items like food, rent, utilities, just to make ends meet. But we're also seeing that some consumers continue to spend. So credit card information is definitely something interesting and something to watch, going forward as we see what happens with the economic pressures.
Absolutely. So a lot of volatility out there, especially a lot that started to creep into the system. In February, what are we seeing the reaction from lenders being?
What we're seeing right now in the analysis for CreditGauge is, new account originations compared to last month have slowed, particularly across credit card, personal loans, and mortgages. This is on the originations. I think it's a combination of two things. Lenders appear to be tightening their credit requirements for new credit issuances. And consumers also, I think, are starting to exercise some caution when taking on new debt. So I think the combination of the two is attributable to the slowing down that we've seen from one month to the next.
Right. Definitely probably two trends going on there impacting that. So love these monthly check-ins on CreditGauge. Susan, how can market participants get updates outside of the SCORE podcast?
So CreditGauge is available on our website. www.VantageScore.com and click on tools and resources. You'll see all of our digital tools, and CreditGauge is one of several of them, and you can get updates there every month. The PDF is available for download. We have press release, and we also have several interactive Tableau dashboards where users can interact and select the criteria that they're interested in.
And you can always listen to the Score podcast because we're going to do this whether Susan wants to or not next month. Susan, thank you for these incredible insights. Listeners can expect to get the next edition of CreditGauge, I guess, towards the end of April, and we'll be sure to visit with Susan again then.
Thanks, Jeff.
Reading all the headlines with all the coverage of volatility in the banking sector, and some banks actually failing, you'd expect a lot of volatility in consumer credit behaviors. And while CreditGauge does indicate that in some sectors and among some consumer segments, there is some increased risk, by and large, consumers have remained relatively healthy. Will lenders continue to pull back? That's the big question. To answer that, we'll have to wait till the next CreditGauge report comes out, so stay tuned. I'm Jeff Richardson, and I look forward to our next discussion.
The views and opinions expressed in this episode do not necessarily reflect the official policy or position of VantageScore Solutions. Visit VantageScore.com to learn more.